Well, thank you for joining us today. This is John Burnham along with Jeff Jones.
Hello.
With the Lending Podcast. We're glad to be with you today, and thanks for joining us. We're excited. We've got another really interesting topic for you today.
We do.
And we're going to talk about contracts. We're going to talk about negotiating repairs. We're going to talk about non-realty items. We're going to talk about a lot of things that after you've been through the pre-approval process and you're out there house hunting, and now you may have found the one that you're putting an offer in, there's a lot of things that goes into that offer.
Yeah, this is a great episode for people that have never been under contract before, or if you have and it went smooth and then all of a sudden you have one now and it might not be smooth because you're finding things about the property that you want to have worked on. You know, we are in our 50th, we're in the middle of our 50s of our episode list here.
56
so this
or
is
so?
56.
Okay, all right.
Yeah, and I think it's exciting that we continue to cover the mortgage process. For those of you listening out there, we try to bring new content all the time. And when you start getting into the 50s, we're like, let's do some deeper dives into what the experience is like. Because what happens is when you're in a contract for 30 days to close on the biggest transaction of your life, it's a pressure cooker of stress, right?
It can be.
And so what we like to do is have good expectations, put those out there for you, give you good information so you can make decisions when those things come up.
Yeah.
I feel like this is one of those of like, when you're in the weeds of a contract, please know how this works out and what it looks like, how it plays out, how it affects your loan, how it affects your closing.
Yeah.
So this is good.
Yeah, and we talk a lot about removing the doubt and creating certainty and clarity for you as a buyer before you ever go house shopping. That's super important. So you know when you walk into the living room of the house that you love, you know for beyond a shadow of a doubt you can buy it. That's super important. Once you've gotten through that piece now, the actual writing the contract, signing the contract, and let's not forget writing some checks, because now some checks happen. Once the money exchanges hands, then it's real, right? That's kind of when the rubber meets the road. So
right.
I think what we wanted to share with you today were a couple of recent experiences that bring to light a very common conversation between buyer's agent, seller's agent, and buyer when it comes to repairs or think the house needs some work. And so I'd take a half a step back for a second. I think our position as lenders, right, we are working together with our buyers, with our agents to prepare a loan that we know will get closed and then get sold ultimately on the secondary market. That's how every lender works. It doesn't matter if it's a big bank or not. Most of the time, they're actually going to transfer and sell the mortgage. So it all comes down to, is this loan sellable? Is it sellable to Fannie Mae, who buys a lot of the conventional loans? Is it sellable to Freddie Mac? Fannie Mae and Freddie Mac buy the majority of the conventional mortgages out there. Is it a government loan? FHA, VA, are they going to guarantee and insure that mortgage? So if you think about it from that perspective, everything that's on the contract, everything that's written into the home buying contract is seen by the lender. And so whatever we write in that contract is seen by the processor, is seen by the underwriter, is seen by the investor after closing. And so I think what's happened recently is we've had some really amazing, there's a lot of value in the marketplace right now. We've been talking about that, a lot more inventory. Our buyers are out there finding homes that they're excited about, but it might need some work. Well, what kind of work does the house need? Is it major? Is it minor? That's what we're going to dive into, and really how to paper that properly on the contract. What expectations should you have as a buyer and as an agent to provide documentation around those repairs if there's repairs needed, and what do we need to ensure that that is covered? And number one, we're protecting the buyer, right? Because your agent is working to protect you. We're working to protect you, and we're kind of looking at it through different lenses, right? The contract is your agent, the loan piece is your lender, and we've got to marry those together.
Yeah, no, that's good. And look, I mean, we're seeing that buyers are getting pickier, because they have, right now they kind of sit in the driver's seat of the negotiation more than it has been historically here in the last 5 years in our Texas market. But with that, because with getting pickier with what they're doing, after they're getting their house inspected, they're kind of making that wish list a lot more than they used to. which is fine. We're putting this episode out there because we're seeing that ramp up even more, especially as we're here in 2025. And a lot of people are shopping between new builds and existing homes. And a lot of times, the existing home is such a better neighborhood, or it's such a better location of drivability to town, whatever it might be, or it's just ready to go, ready to move in. So existing homes are still highly valued. And so, but you want just that one little tweak. So let's get into it. So after the contract happens,
so you found
go ahead. You're going to lay it out.
You found your home, and we always recommend buyer's agent, lender, buyer. We're working together as a 3-person team, right? Or 5-person team if it's a couple and an agent and us. So whoever's on the contract, we got to be talking about how we're structuring that contract, number one, okay? So how the contract is structured, what kind of loan you're getting, how much you're putting down, all those things, which we probably dissected more in the pre-approval process.
Right.
However, buyers may anticipate, I'm going to put 20% down or I'm going to put 10% down, but then they find a house that maybe needs a little bit of cosmetic work. We want to paint the cabinets, we want to put new floors in, whatever. Right. So maybe we put 5% down and then put some money towards those cosmetic things that you can see. That's an easier conversation than we write the contract, submit, it gets approved. Now we're getting the home inspection, and the home inspection has got some things on there that need to be addressed.
Yeah. And obviously the size of the project makes the big difference.
Yes.
So if it's of a roof, if it's a foundation, those are big ticket items, right? If it's just something simple, like we're going to replace a door or windows, not a big deal. But so let's get into like the options of either reducing sales price or getting cash, concessions or getting the work done.
Yeah, I think a lot of times it's easier to navigate that up front if going in, okay, we found this awesome house, we know it needs a roof.
Yeah.
Okay, and so we're just going to negotiate that as part of the contract. The surprise element is when the inspection's done, and now it's like, okay, we found some water damage. We found some, maybe it's a foundation issue, maybe it's a roof repair. And keep in mind that home inspectors, their amazing skill set is to find the defects, right? To find things that you can't see. They're opening up the cabinets, they're looking behind the places that you don't look, right? Going in the attic, doing all those things. And so we need that part of the process to protect you as a home buyer. The challenge for some folks is like not everything on the home inspection that's pointed out as a defect has to get addressed immediately, right? It might be, something that it's a loose doorknob. It's something really minor that, okay, we can fix that later.
Yeah.
And so what we see a lot of times is let's tally up the amount of the small repairs, coming back to your point of should we reduce the sales price or should we ask the seller for some cash, some seller concessions. And it depends, right? If it's a small $1,500, $2,000, I would argue if those are just some things that you can do, kind of your handyman can fix or what have you, is to ask for the seller to give that to you as a credit at closing. So
on top of it, I don't know how people are out there, but I'm very picky and I would want to choose what work gets done, what color of hardware to put on cabinet, whatever it might be.
Great point.
So all day long, I would ask for concessions.
Let me give you personally.
Give you a personal example. I want to do the work, or I want to have control of it.
No, that's a really good point. Yeah. So the last property we bought, the dishwasher was kaput, right? It had to get replaced. And this was not our homestead. This was a property, our second home in another state. So I'm thinking, okay, I'm 700 miles away from this discussion. I'll just get the seller to replace the dishwasher.
They went Hot Point?
They put the cheapest. It looks
Sorry
nice.
to degrade Hot Point.
It looks nice. It's stainless steel. It matches the appliances, whatever. But the quality of the appliance,
you wouldn't have chose.
I would have spent another $200 and got a very nice, higher end. And I didn't know that it was a lower end appliance till it's already installed. And my handyman said something. The first time it had issues, he said, "Oh, by the way, this is a really cheap dishwasher." Mm-hmm. So to your point, that's why you really want to, if you can, on the small things, get the concession from the seller, do it yourself. Yeah. Exactly. Yeah. So the other option is, okay, we're just going to lower the sales price. We think that the house is it's going to need $5,000 or $10,000 worth of work, and we offered and contracted for $400,000. Let's just lower the price to $390,000. Okay, $10,000 price reduction. Nothing wrong with that. It's just, how does it impact your financing? Well, if you reduce the sales price 10 grand, but the house needs $10,000 worth of work, you're still coming out of pocket at some point in cash for that $10,000, or
right.
maybe $9,000 if you're putting a little bit down. There's a little bit of a delta there, and how much you're financing less, so you're saving maybe a little bit of the down payment, but you're coming out of pocket for those repairs.
That's right.
So, and maybe there's a combination, there's a hybrid. You bring the price down $5,000, we get $5,000 from the seller, and so those are discussions that we strongly encourage you to loop your lender in on those post-inspection discussions. Now,
because a concession, available concessions that can help either get paid to reduce your points of your rate would be a much higher monthly savings than just a price reduction of your loan amount. So, so just good to, like you said, loop in your lender, because those two options might be a drastic difference on your monthly payment.
Yeah, for sure. Well, yeah, the quick math is if you took $10,000 from the seller and just reduced the price, your payment's probably going to go down $60 or $70. If you take $10,000 and you want to put that towards an interest rate buy down, you're probably going to save a couple $100 a month.
Right.
So those are discussions, and again, there's maybe a hybrid there. And so a lot of times what will happen is, we contract on a Wednesday and the inspection's done on a Friday and the amendment's done over the weekend for these repairs, and we get the signed amendment Monday without even really being looped into that discussion. Right. And then we'll say, oh, by the way, you can't get $25,000 from the seller to pay closing costs because there's not that much closing costs. So we have to really look at, number one, the loan program. So our communication to our realtor partner and buyer is, okay, the loan program that you're doing will allow the seller to pay X amount maximum towards closing costs. Okay, and let's just say it's an FHA loan. Well, an FHA loan, the maximum is 6%. So the seller can actually pay up to 6% towards closing costs. Let's just use that $400,000 price, purchase price example. That's $24,000 that the seller could pay towards closing costs. Newsflash, your closing costs aren't going to be $24,000, right? And so you can't get $24,000 from a seller if your closing costs are $5 or $10. And so in that case, we'd want to get some seller concessions, but we'd also want to do a price reduction and use both of those to make the buyer happy, and the seller's already agreed, yeah, we'll come down on the price, we'll give you X amount of dollars. Let's make sure we're using those dollars appropriately to fit in the loan guidelines, so we're not going back after that first amendment and redoing another amendment.
So always loop in your lender, when you're looking at changing the contract, because the options available of the loan program might dictate what you can do.
100%. Okay, let's talk about some big items.
Okay,
let's
go big.
Let's say you contract on a house, and this is a live example from yesterday or 2 days ago. You contract on the house, and you don't know that the roof needs to be replaced until after the home inspection. Okay, now the home inspection's done, the roof needs to be replaced, and you get a quote for the roof, and it's $22,000, which just happened.
Well, just real quick, people that don't know how inspections work, an inspector is basically like a generalist, right? So they're going into the house and trying to do a big review of all the systems, exterior, interior quality, and making sure that they don't find problems, right? When they find a problem, since they're a generalist, they most likely will encourage you to go get a quote from a specialist, right? So if it's a roof problem, they're going to ask, get a roofer. If it's a plumbing problem, get a plumber. If it's foundation, get an engineer. So they're not the one giving you those big quotes.
True.
They're the one letting you know you need to go out and get a specialist to give you quotes.
That's very good point. Yeah. So they're gonna
it's
say,
the second person that's gonna need to come out.
Right. We noted, but they might notice, okay, it looks like the roof might have some hail damage, or they notice that there's some shingles that are messed up or something. So the visual aspects will be noted on the inspection report. Then you go to your next level and get the specialist. And that's all done with communication with the listing agent, buyer's agent. Hey, we're going to get
your real estate agent really helps a lot in that process. So it's critical to have a great real estate agent that has a Rolodex of good, contractors, basically.
And most of them do, yeah.
Yeah.
So you're going to lean on your agent for sure. And we have some resources too. And so now the roof needs to get replaced. Okay, so let's take this most recent example. Okay, it was a $22,000 roof. Okay, the seller agreed to pay for it. The seller
Nice.
also talked to their insurance company, happened to be one of the big companies that you see commercials for all the time. And the insurance company came out to the property, assessed the damage, and she put in a claim. The seller did, and they're working on that right now. Well, here's the thing. In the meantime, the buyer's agent had a relationship with the roofing company, and the roofing company agreed to do the roof, put on a new roof prior to closing
In good faith.
and wait to get paid either by the seller if the insurance company does not pay for it, or by the insurance company if the insurance company said, yes, we'll accept the
So
claim.
the seller is taking care of all of that,
Seller's taking care of all of it.
not the buyer.
Okay, right.
Okay.
The contract, the amendment was written perfectly by the buyer's agent. Seller to put on a new roof, seller will pay for the roof. If the insurance company doesn't pay for it, seller agrees to pay for it. I mean, we had it all papered up. Here's what happens. The roof goes on, and we don't have any confirmation that the roof had been paid for.
That it's the onus of who pays for it is settled.
Right. Now,
No receipt.
we know that the seller is contractually obligated to pay it, but here's the hypothetical. What if the seller doesn't pay for it? The only recourse for the roofing company, I guess they have two recourses. They
Put a
can go
lien
after the
on
seller,
property.
or they could put a lien on the property. So if they put a lien on the property, that jeopardizes our borrower's clear title. It
Right.
jeopardizes potentially our loan position. So now we worked through it. We got around it. We were in communication with the roofing company directly on the timing of the payment, and but it had to go to the higher ups of our company to get approved. And so the workaround, I think, the open dialogue that needed to have happened, and I'll take responsibility for this for sure, is when is the payment going to get made?
Right.
What type of documentation do we have on when the payment's going to get made? And if we're trying to close on the house and the roof is already completed, but there's an outstanding invoice, that was the miss. That was the disconnect, right?
Yeah.
So we need to know the timing of most of the time those get paid at closing.
Right.
Okay. So let's fast forward. I actually had 2 back-to-back closes. So that was Wednesday, and then yesterday.
Well, before you move on, so I think what people need to hear in that
Yeah.
is, the biggest takeaways is everything was really done right. What wasn't done right, or what could be done better, is the paper trail of commitment from the seller to the roofing company, right? And so because as the bank that's financing the transactions, they need to make sure there's not going to be a lien on that property in the near future, right? And so if people know that ahead of time, instead of like the crux of the last days of closing, where the stress is the highest, then at least people have an understanding of, okay, the seller's going to be providing this paperwork with the roofing company and the insurance company, and the bank's going to be okay with that paperwork because we have it ahead of time.
Yeah, and in some cases, we can do something called an escrow holdback, which is where the title company just pulls that money for the invoice out of the seller's proceeds, sets it aside, and sometimes we need 1.5 times that amount just to protect in case there's an overage or whatever. Roofs are pretty much the numbers with the number, but we usually need 1.5 times the invoice amount. So had it been set up differently prior to closing, we could have maybe taken that money out of the seller's proceeds. As it was, it worked out just fine. But the thing is, like, the buyer had a deadline. They needed to move in the day of closing. Like, they had a moving truck. They had appointments.
Usually on a Friday.
It's usually on a Friday. It's usually on a holiday weekend Friday. Monday is a holiday.
Yeah.
And so these are things where even if everything is written in perfectly on the contract and the buyer's protected, seller's on the same page, buyer-seller agreement, TREC contracts signed off on, the lender could still have additional requirements. And so that's a big one. That was a $22,000 roof, right? The other one that I had, it was back-to-back days. Another property happened to be a second home for my clients, and it also needed a roof. However, they negotiated with the seller to basically split the cost of the roof. I don't remember I think it was like $18,000. So the seller, I think, paid $10,000, the buyer paid $8,000, something like that. They paid for it at closing, and the buyer actually brought their $8,000 and the seller paid for their $10,000 out of the proceeds. The title company takes that $18,000, cuts a check to the roofing company.
I like that.
That's clean. We know the roof's paid.
Yep.
Title company is ensuring that transaction, that there's no liens on the property. So it's just the way it was papered in that instance, and the way it shook out, it was maybe a little cleaner. But those are some big ticket items. I was talking to another colleague here in the office yesterday. They just had a client that had a new roof getting put on there. So we're seeing a lot of roofs. Of course, we're in Central Texas. We have hailstorms. We have windstorms. We have different weather events that can cause those roofs over time. A lot of shingle roofs here as well that wear down over time. So that is one of the most important things about your house, is having a new roof. And if you get a new roof put on, your insurance is probably going to be cheaper too.
So we have we're hoping to do more interviews. One of our interviews is going to be one of our insurance friends, and that should be one of the biggest questions we ask is, explain to people what a new roof does to your insurance policy.
Yeah.
And it does a wonderful thing.
It's huge. I mean, it's like the number one question. Yeah. If you're getting any insurance quote, they always ask, how old's the roof?
Right.
So, of course, if you don't know, then the insurance company has sort of that unknown checkbox, and that's a higher risk than, it got put in, a week ago or a year ago. And so the new roof really helps. So I think that's something from a contractual standpoint that can be one of those little snakes in the grass, sometimes a big snake in the grass, that if it's not communicated well throughout the process, can jump up at the closing and be this like, oh, I didn't know that was going to be an issue, because we hadn't really talked about it. So number one, make sure if you ever sign any amendment throughout the closing process, throughout the transaction, that those amendments come to the lender. You got to send your lender every single amendment. There are times where...
And don't delay.
Yeah, don't delay.
Please don't delay.
Yeah. We see that sometimes where there's amendments signed behind the scenes. We don't know there's amendments, but the title company has the amendment, and then we end up with the amendment kind of too late to realize that, the seller is actually paying some closing costs, and that wasn't factored into the to the loan approval. And so there's some extra manpower that's put into that to correct that. Does it always delay closings?
Yeah.
Not necessarily, but is it extra work that really could have been avoided? Yes.
And look, people are good, hopefully, at what they do for their job. Realtors are good at being realtors. Title companies good at being title company. Lenders good at lenders. The inverse is not true. A realtor is not good at being a lender. A lender is not good at being a realtor. None of us are good at being title companies, because that's just it's a whole animal. So please know that if you're working, with a realtor and there's changes being made to the contract, those changes are being shared from your realtor to your lender and title company. Like all those parties need to know as quickly as possible. So just keeping that open line of communication, having people that are available and accessible to make those changes for you and let you know how that plays out with your money and your timing.
Yeah.
So, but we also talk about contracts and how things are written.
Yes.
Let's talk about some things that we should make sure don't show up on a TREC form, but come up on a bill of sale.
Yeah.
So those non-realty items.
So
should probably not go.
Let's take a deeper dive on non-realty items. It cracks me up. Like if you really think about the TREC, Texas Real Estate Commission. Obviously, we're in Austin, Texas, Central Texas. Anywhere in Texas, we can lend. The TREC contract is not necessarily written for financed transactions. It's written for seller to sell to buyer, buyer to buy.
Property specific.
And then there's addendums for things like if the buyer's getting a loan, which is called the third-party financing addendum.
Right.
So what we see a lot of times in the non-realty items addendum are things that are not attached to the home. And I'll give you a real-life example. When Katie and I bought our house, which we bought in 2015, the seller was staying in the neighborhood, but they were remodeling. They bought a house, they were remodeling, and they didn't really want some of the things that were in their house. And we actually loved the stools that go with the kitchen island. We liked the patio furniture. There was an upstairs couch that it was in great shape. So we just talked about some of these things, like, are you going to take these things? And they said, well, no, we're not going to, we don't want them. Do you want them? They actually just kind of threw them in to the sales price. But we wrote a separate agreement that we're going to get the couch, we're going to get the bar stools, whatever. And it was, 8 or 10 things. The outside TV that was on the patio. So they weren't things that were attached to the home. And when you have things that are not attached to the home, riding lawnmowers, trampolines, green eggs, the barbecue green egg, and someone's not going to take their barbecue pit with them.
Farm animals.
Farm animals. Have you seen that one?
Yes.
Oh, wow. Like a goat or something?
Ostrich.
Ostrich. Okay, we're going to leave the ostrich?
They left the ostrich.
Left the ostrich. Okay. Well, they are tough to move, I guess.
Yeah.
Okay, they're mean.
I stories there.
I haven't seen that. So think about this. If a contract was written and it's a cash buyer, there's not a lender involved. You can put anything on that non-realty items you want because there's not a lender overseeing that, looking at that contract.
Right.
When you start putting in anything in the non-realty items that isn't attached to the home, then we consider that in the lending space, we consider that an inducement to purchase.
Right.
So we'll sell you the house at X price, or buyer says, we'll buy the house from you at X price, but we need all these other things included in the home that really aren't part of the value of the home.
Yeah, and one way to differentiate, if people are unsure what it is, think of the home appraisal.
Yeah.
So when you get the home appraised, it's going to create a value based on the structure, condition, interior, exterior of the property. It's not going to value the home based on the furniture.
True.
It's not going to value the home based on what appliances are in there. It's going to value the home based on the real property.
True.
Right?
Yeah. Now, things that we are completely okay with: refrigerators, washers and dryers, any built-in, like there's a surround sound system in the media room or something, a built-in screen, like that's all part of the media room has its own equipment. That's part of the house for sure. But sort of this external, there's a nice TV in the living room and we're just going to leave it. And we just had that. There was a non-realty items addendum one of my agents put together. And it was two TVs. And I said, okay, what we got to do is strike that from the contract, write a separate bill of sale. And for usually the value and consideration for purchasing something in Texas is $10. You make a little legal contract contingent on the purchase of the home. And of course, we're not attorneys, so consult your attorney if you have questions on this. But it just needs to be outside of the TREC form because the TREC form, as it relates to lending, only works for things that are built into the home.
Yeah.
It doesn't work for the trampolines and the lawnmowers and
so
things
keep
like
the
that.
non-realty item separate.
Keep
the contract clean about real property, not personal property. Right?
Yeah. But at the same time, we understand the spirit of putting those items on the non-realty items addendum is to protect the buyer, make sure the buyer is getting the items that have been agreed upon, between buyer and seller. So we're not saying to leave the buyer unprotected or exposed, at risk. But we just have to paper it a little differently. It's one extra document. So we unfortunately have to make that call sometimes. Okay, there's a non-realty items addendum. We have all these things listed. I've seen things that were in the garage, a workbench, things like that. It's just not something that can be part of the non-realty items addendum. And I think that there's a miss. What I've found after doing this for a long time is that there's a little bit of a miss in the education that our newer agents get about that form. The education about the non-realty items is make sure you put anything on there that the buyer wants and that the seller's agreed to provide with the house so that the buyer's protected. That's good in one case, but is it going to be acceptable for the lender? So that's where we just work together and we come to a common ground and we figure out a solution, and it's usually a super simple change.
Yeah. No, this is good. So negotiating home repairs, I hope that if you're out there and you're a real estate agent and you're like, okay, these guys are saying things that I'm loving, I want to make sure my buyers know, please share it.
Yes.
What else do we want people to know before we finish this up?
Yeah, I think the takeaway on negotiating repairs is, again, you can ask the seller to fix stuff. You can ask the seller to give a concession in cash. You can, of course, do some kind of hybrid. If there's work that needs to get done, this is the most important thing, I think. If there's work that needs to get done per the contract, so seller agrees to replace the dishwasher, seller agrees to fix the patch of the roof that the 2 shingles were missing, whatever the little repairs, if it's minor stuff and the roof doesn't need to be replaced, but it just needs to be repaired, whatever it is, plumbing issue, know that we're going to need proof that those things were done. And a lot of times we send the appraiser back out there. If it is something that the appraiser can see in the report, then we'll do what's called a final appraisal inspection. Usually they're about $150 to $200. It is a buyer cost typically, so just keep that in mind when we're negotiating that. Maybe we're factoring in that what the buyer's going to have to pay for because the seller did something, right?
Right.
And so there's an extra cost there potentially. We always disclose that as a possible cost because we never know if an appraisal is going to come back with something that may need to be repaired, right? Lender required repairs. But when things are completed per the contract, we may need a final appraisal inspection, and or we may need some paid invoices, and or we may need the invoice to be paid at closing. If maybe that was the contractual agreement, seller to pay this invoice at closing. We need all that documentation, whatever's in that contract, because again, at the end of the day, we're taking that loan, we're closing it, we're funding it, and then we're going to ship it off to Fannie Mae or Freddie Mac or whoever's purchasing that mortgage, as most other mortgage companies operate. And we just have to make sure it's all documented.
Yeah, everything is settled and clean. That's the biggest thing, that nothing can come back and bite the bank in the butt. Right.
Right.
So that's really what we have to do, is just cover all bases and make sure that all transactions are finalized and verify that they're final.
Yeah. Yeah.
So,
and we didn't really talk about, prior to the contract going in, if on the MLS report, let's say that it says foundation repair needed. Okay. All right. Well, so there's some solutions there, but most of the time on a foundation repair, you're either doing some kind of home improvement loan that includes that foundation repair,
loan, right.
or we're getting the foundation repair done during the contract period, having a structural engineer check it out, sign off on it, and close. It's more involved.
Yeah, that's a good point. There could be a whole episode on renovation loans, that we lenders do for you. So knowing those big issues ahead of time, that can be a part of the loan program to get funds available for you from your lender to pay for theirs after you own the property. As a part of your financing.
And we just want to be looped into those conversations to help you structure, to help your real estate agent structure the contract so that it's as beneficial as it can be for you. And certainly want you to get the best price. We want you to get the best financing package, and different loan programs fit those needs differently.
Yeah.
So
good.
Yeah.
This was good.
Cool. Hope you enjoyed it.
I hope you enjoyed it out there. Please give us comments of what you'd like to hear from us, and like, subscribe, share. Thanks for tuning in to the Lending Podcast.
Thanks for tuning in. We'll see you next time.
Bye.